Earnings-led moves on the likes of United Spirits and Persistent Systems. United Spirits delivers a miss on margins and volumes despite a beat on profits. Meanwhile, a steady show in the third quarter fails to buoy Persistent. New labour codes dent both margins and profits. High valuations too weigh in.
And we told you first, and now it's confirmed. Inspira Global, the owners of Chinese Wok, pick up Everstone's controlling stake in Restaurant Brands Asia. Additionally, Inspira will also inject 1,500 crores.
Cupid announces a strategic investment of 331 crores in retail chain operator Bazaar Style via subscription of convertible equity warrants. Transaction price at 328 rupees per share. Cupid set to hold 11% stake in the company. Both shares under pressure.
Credit Access Grumman, that's the start today. That, reports good set of numbers. Brokerages, they upgrade the stock following the good showing, both in margins as well as credit costs improving. While India Mart delivers a 56% growth in profits, the shares are up 2.5%.
Earnings disappointment drags shares of Shoppers Stop down by 6%. Exceptional losses dent profitability. Management marks uneven discretionary demand coupled with elevated pollution in the national capital for a weak show in the third quarter.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And the Nifty actually has taken a bit of a nosedive yet again. So we're at the low point of the day. The problem today is that now we have breached the 200 DMA as we speak. And the other problem is the Nifty Bank. That was holding on to the 20 DMA. Now that's breached the 59,000 odd mark, which means it's trading below the 20 as well as the 50 DMA. Mangalam, but this is actually on expected lines. Going by yesterday's price action, the first few hours of trade are going to be difficult. Some margins as well will be, margin calls will be triggered. And there'll be some squaring off that we'll see in the first couple of hours. The hope is post 12:30, you see some kind of recovery. For the time being, there's a bright red all across the screen.
Take that point, Nigel. There is a fair amount of uncertainty, not just in our markets, but equities globally as well. And we see that with the kind of action that we've seen in the price of gold and silver as well. Typically, anecdotally, these moments of extreme high panic, etc., are actually the ones which do suggest that the market at some point bottoms out. Not to say that it may happen today, tomorrow, day after, but nearer to the bottom than we would have expected, largely because, there is a peak amount of fear, and that's reflected in the kind of move that we're seeing in the India VIX as well, 5.5% higher for that index. A bunch of triggers lined up ahead for Indian domestic equities to do a lot better. Let's see how the story pans out. But for now, we are taking as it comes for immediate market actions, globally as well as locally too. But amidst all of this, there are companies which are reacting to better than expected numbers, and one of them is India Mart Intermesh, reported better than expected numbers in the third quarter, even as churn in subscribers continued. Dinesh Agarwal, who's the CEO at India Mart, joins us to discuss the numbers, and we'll obviously focus on one, the fall in paid subscribers, the trend out there, the churn in silver tier subscribers, when does that normalize, and finally the outlook on collections and margins for the next couple of financial years as well. Thanks a lot for joining in. It's a good set of numbers after, many quarters of some sort of uncertainty around Mr. Agarwal. Interestingly, it also comes a few days after, an important fund, Nalanda Capital, has gone ahead and bought stake in your company as well. So maybe, good times continue is what the investors' bet is. But more importantly, we'd like to look at what the promoters' bet here is as well. The last time you joined us, you did say that subscribers should rise by about 2,000 per quarter. This quarter, they declined by 1,000. Could you explain to us, because it was of lower working days, or was it because of the silver price changes, silver tier price changes? And when do we expect this 2,000 subscribers per quarter addition to come by?
Yeah, I guided in the last quarter con call also that we have taken the price hike in the silver subscription from 28,000 rupees to 500 to 32,000 rupees. And we expected that next 2 quarters, the gross additions will continue to be a little subdued. And given that, we have received less number of gross addition, and that is resulting into slight lower net additions. And I believe that by the end of March, we should be over of that. And from the first quarter of FY27, we should be able to come back to that 2,000 net addition mark.
2,000 net addition per quarter, right?
Yes, sir.
All right, Mr. Agarwal, the other question is, these paid subscribers that we talk about, paid suppliers, do you think the market is saturated actually at around, say, 220,000 to around 250,000? And that's the first part. And the second part is, do you think that at some point of time we'll move to a transaction-based fee that could help your revenues in turn?
See, we don't see there is any saturation in the market as of now. As I said in the past couple of years that we have had certain blind spots which we corrected over the last year or so, quality of inquiry, intent of buyers, and you can see that repeat buyer percentage is increasing slowly and slowly. And as the number of buyers increase on the platform, I think there is enough demand on the supplier side to come on the platform. In fact, most of our gold and platinum subscribers are seeing higher amount of upsell and better retention rates in the current quarter. And that is why you see better collection from customers as compared to the 8-9% that we had for many quarters.
No, we take that point.
And transaction-based is not something that you're looking at, right?
Not currently, yeah.
All right, not currently, so you don't rule it out entirely, but as of now, it's not on your plans. On gold and platinum, they're doing extremely well. I just wanted to know about the churn in the silver as well. Is the churn, the worst of the churn behind us, or maybe the fourth quarter we see a little more? If you could quantify that.
Yeah, I think the churn is remains elevated at the silver level. There is no up or down in the last 3-4 quarters. We expect that since the changes in the buyer side and in the changes in the inquiry quality has been done in the past year, I expect that next year there should be some respite in the silver quarter churn.
Okay. What about the ARPUs? What does that move up by?
ARPUs are moving consistently. If you really see 6 to 8% historically also, and even this particular quarter, they are moving consistently up.
Got it. Give us a few more details, and sir, what is the cash in your books right now? 2,500-3,000 crores?
Yeah, cash on the books is right now on the consolidated basis 3,050 crores, 51 crores to be precise.
So utilization will be interesting then. You have more inorganic plans? Or do you think you want to return some money to shareholders? Some investors have seen the stock half from the top. Now there's renewed interest, and you're signaling that maybe the next 2 quarters odd, you see a turnaround. Do you intend to return some cash to your shareholders?
We have been a good cash return. If you really see in the last 5 years, we have returned close to 1,300 crores back to the shareholders, and we continue to do that. Similarly, on the inorganic side, we have acquired about 600 crores in the Busy Infotech as well as in the live keeping. So 2 companies that we have acquired, and we have invested for the minority stakes another 700 crores. So I think we continue to trade cautiously on both sides while we are cognizant of the fact that there is an excess profit that needs to be returned to the shareholder as well as to be invested for the growth of the company.
Every time there is an excess profit, it has to be invested for the growth of the company as well, if not, returned to shareholders. So what avenues of growth are you tapping is what medium to long-term investors would want to look at, not just the next couple of quarters?
We continue to look at B2B opportunities in the SME sector as well as in the software SaaS sector. And we continue to see more opportunities in the accounting side, taxation side, HRMS side. So multiple avenues are there. We understand software well, we understand subscriptions well, and we continue to invest in that side.
Okay, just finally, to clarify this, you had earlier seen 10 to 12% growth in your collections for the full financial year. The third quarter, you've done about 17%. You stick to the 10 to 12% growth guidance?
Yes, I think this is my first time we have broken after the 4 or 5 quarters. So let us wait for 1 or 2 more quarters for the trend. Otherwise, my guidance would be still 10 or 12 quarters.
And any early trends on, what the next year could look like in terms of revenue, margins, and overall growth?
I think given the we are on a run rate of about 400 crores collection per quarter now, so effectively about 1,600 crores for this particular quarter, 16 to 1,700 crores, and similar growth coming on the for the next year.
Got it, Mr. Agarwal. Appreciate you joining in. Wishing you all the best for the time to come. One of the few stocks that are trading in the green, India Mart, and Mr. Agarwal is sounding quite optimistic. An eye on the Nifty, though. We're heading gradually towards the 25,000 odd mark. We've reached the 25,050 mark. I'll tell you what, slip into a short break. On the other side, we'll focus on the new listing, Amagi Media Labs. That makes the debut. A little bit weakish one, but we'll understand. What about the business outlook from here on?
The Nifty is under severe pressure right now, but what we'll do is we'll, meanwhile, speak about the primary market action as well. In a market like this, obviously, listings will make a big debut, and Amagi Media Labs, listed with a discount of over 10% to its issue price. Bhaskar Subramaniam, who's the co-founder and MD, CEO of the company, joins us to discuss the way forward for the company. Congratulations on the listing, Bhaskar, in an extremely volatile market situation where the Nifty is actually testing that 25,000 mark, and mid and broad caps are seeing a wider sell-off. You've managed to list, but that itself is a milestone, a mild discount notwithstanding. What the street really wants to know from here on is the growth prospect for the business. The first half of this year, you've done margins of about 8%. That's shown some signs of operating leverage come by, and your revenues have compounded by over 30%. Do you think this 30%, 25 to 30% sort of rate is sustainable on the top line? And what's a peak margin for businesses like yours? Because SaaS margins generally are much, much higher than just this 8%.
No, thank you very much for having us on the show, right? So if you look at it, Amagi, as you know, is a media technology software SaaS company. And our business is global, right? So again, if you look at it, we're in a very early phase of the transformation of this whole market and the business itself. If you look at it, the biggest growth area for us is what we call modernizing to the cloud. All of the media business starting to move into become software-centric. So there's a big tailwind for us going forward in terms of what's the growth engine that is in front of us. Having said that, if you look at the last 2.5 years, the company has not only focused on growth, but and on profitability. It's always an and for us, if you look at it. So we balance both growth and profitability. You've seen us doing greater than 30% CAGR growth over the last 2.5 years, and yet demonstrate that the operating leverage of the business is starting to work. We see that as a continuing trend line going forward as well. If you look at any vertical software SaaS companies, eventually from a stable state standpoint, they're roughly anywhere from 20 to 25% margins. That sort of is the stable state businesses that has actually come through. And directionally, that's where we need to go as a company as well.
Okay, all right. Hi, sir. Good morning. Good to see you in. What about your geographic diversification? America and Europe are a big part of your revenues. I mean, almost all of it. Going ahead, how does the mix look like? And with Mr. Trump in office, it's just 1 year complete, 3 to go. Any kind of risk to your business?
Two parts, right? If you look at it, Magi's business is a global business. So essentially, every TV channel, content creator, of sports producer or news producer worldwide is our customer. So to that extent, it's a broad-based global business. Historically and otherwise, if you look at it, United States looks as the largest market today, even as a media business generically, not only for Amagi, but as a media, the depth of the market is much, much higher. So roughly, we are mimicking the market's depth in terms of the percentage of what we see from a contribution for our business as well. Having said that, Amagi has been kind of expanding globally. Over the last 18 months, we've expanded into Brazil, France, Germany. We've just started Japan, Korea, Australia. And of course, we see India as a large growth market over the next 2 to 3 years, for example. So clearly, there'll be a broad basing in terms of the revenue contributions across the globe. That's going to happen. Trump and the policies, obviously, we don't control. We don't have any sort of, and as you know, our business is not impacted by tariffs. And we continue to see the growth. Us as a mission-critical software that every company in the world needs it. So to that extent, we feel we're immune to that sort of change at this point in time. And we don't get impacted right now. We don't continue to see any such challenges today. We don't outsource humans, people, services. We are a software technology company. We continue to see progress from here on. It's really about the innovation and the customer value that we bring is going to be core important for us in the next 2 to 3 years.
We take that point. You know, you did say that biggest growth area for you is the company modernizing the system to the cloud itself. If you could give us a sense of what the penetration is at right now and what the total addressable market here is and what your potential revenue could be in, the medium to long term out here. And I also ask this because while there is a lot of headroom, markets like India and globally, they're known to, skip generations as well. So oftentimes when we look at a potential TAM, that gets negated by a new technology which has come in, and the need for that, product or that service or solution itself being rendered futile.
Okay, I want to reiterate that Amagi is the new technology that's changing things, just to give you context as well, right? So if you look at it, moving to the cloud and investing in AI and agentic infrastructure, that's where Amagi is really spending its time and effort and money. And that's a reason for us to win the market today as well as we move forward. Having said that, if you look at it, for us, the market is, as I told you, global. And if you look at a TAM is roughly about $17 billion. Out of the $500 billion in media entertainment spend, $17 billion gets to spend on technology. Roughly 10% of that is actually moved to the cloud and new software. So the big change is in front of us. The biggest tailwind for us is the 90% transformation, out of which 40 to 60% transformation we're expecting to happen by 2029. So the biggest growth is in front of us, number one. Number two, if you look at it, AI is a big transformative force. Like every other industry, media is going to go through that as well. Amagi is very well positioned as a platform strategy, what we call glass-to-glass strategy, to really go accomplish this for our customers. We're already in trials with multiple different AI products for our customers, and we're very, very excited in the investments we're making and the change and the transformation that we can bring to the business. So we're kind of leading the technology change for the world in the media business, using AI as a big transformative force.
Okay. All right, sir. Appreciate you joining in. Thanks a lot for giving us that view. Wishing you all the best, and we look forward to having you on the channel yet again. By the way, when we're having that chat with the management of Amagi, I think what was flashing on the bottom of your screen is important. Niket Shah, well, there's been a bit of a rejig that's come in on, in Motilal Oswal, so I think we should get that flash up for you on the screen. Niket has been with the group for quite a few years on, and now there's an internal rejig that's taking place.
Yeah, he was the CIO of Motilal Oswal AMC and now has been transferred internally itself and was, instrumental in increasing the AUM by a large bit as well. But the street is taking note of that via a bunch of stocks as well. Some of the large holdings of, the funds that he would manage directly included the likes of Kalyan Jewellers, which is now down about 10%. And from its peak, it's down about 32% as well. So if you look at, Kalyan Jewellers, it's now down 10% this week, down about 16%. And from its peak, down about 35%. If you look at the shareholding of Kalyan Jewellers, right, Motilal Oswal Mid-Cap Fund last December held about 6.3% stake. Now it actually holds about 9.05% stake. So their stake has increased. And at the same time, if you look at, retail shareholding, that has increased. And promoters, they bought stake in 2024 from Warburg Pincus. And promoters' shareholdings is currently 62.75%. 25% of that is pledged. So with a bigger decrease in that, if the promoter's stake is pledged, then there could be a bigger decline out there as well. But speaking about bigger declines, the Nifty's breached that 25,000 mark for the first time since October 6th.
That's a slam dunk, actually, Mangalam, that's taken place just in the last 30 minutes or so. And this was on expected lines, right? The first few hours are going to be very, very challenging. There'll be margins that will be triggered. Yesterday, there were some signs of capitulation as well. The Nifty has now decisively breached that 200 DMA mark as well. That was around 25,100. And just as we started the show itself, there's been a sharp slide even from there. Few stocks that have come in for selling. There's Max Healthcare, Geo Financial, Eternal. All of them have seen a sharp decline. And the problem is the Nifty Bank. That was at least holding one end up for all these trading sessions. That's lost close to around 1,000 points or thereabouts. A few factors playing out here. The rupee has weakened yet again. 91.4 is the last time I checked. So the rupee weakness will obviously, put further pressure because the FI selling just gets mounted on. And that's what we've been seeing. So the rupee needs to stabilize, first of all, to see any kind of change in terms of the FI, positioning in the Indian markets. And also out here, we're only talking about the headline index, the breadth of the market. That's turned in favor of the declines. 5 stocks declining for 1 stock that's advancing. A very, very difficult morning of trade, Mangalam. But hopefully by noon, we see some kind of sanity, Mangalam.
Well, the lines are at the furthest point this morning itself. And our ticker team tells us over the last two trading sessions, 15 lakh crore of market cap have been erased in just the last trading session and a half so far. And the Nifty right now just about 24,950. It's a hot knife through butter. You're looking at a lot of these bigger names as well. ICICI Bank down about 2.5%. That's causing a notable downward pressure on the Nifty Bank, which is now down in 4 digits. Moments ago it was 900 points, now about 1,050 points. LTI Mindtree not doing too well. Apollo Hospitals, Adani Group stocks. So it's not one particular sector stock which is going in for selling. It's broad-based. The only sector which is holding up right now are the safe haven assets. So you have something like an HUL, which is marginally in the green right now, and a couple of these metal names like JSW, Steel, etc., or maybe some bit of Sun Pharma as well. Traditionally seen as safe haven purchases, IT, pharma, as well as FMCG. But IT obviously is seeing a bit of a slam dunk on account of growth worries, global concerns. The Nifty on the verge of breaking the 24,900 mark as well. So it is definitely intensifying, and that intensity is perfectly captured in the India VIX. When we started the show, it was up, 4, 5, 6%? Now zoomed up to 13%. The Nifty holding at the day's low. What we'll do is...
Very, very aggressive selling, Mangalam. I don't know whether someone has a couple of dealer desks have just pressed that sell button, and that's why you're seeing such a sharp fall on very, very large volumes as well. Some of these stocks are down, and some of the frontline names as well. So let's see whether, Mangalam, we can see some sanity. But otherwise, the look is not good. As you said, 24,900, that needs to hold out. Otherwise, we're going in for a deeper decline. 24,900 going by the options data, and 25,100 at around the 200 DMA. Well, I'll tell you what, we'll wrap up on this edition of Chartbusters, but you stay glued to the screen. The team of Trading Hour comes up next.